HCW Biologics delivered a significant revenue surge in the first quarter of 2026, reporting $6.54 million in revenue. This is a dramatic increase from the mere $5,065 in the same period last year. The primary driver of this jump was a $6.5 million licensing agreement with Beijing Trimmune Biotech, signed on March 16, 2026. Under the deal, Trimmune obtained exclusive global rights to develop and commercialize HCW 11006, a key asset for HCW Biologics. This licensing fee not only fueled revenue, but also contributed to a net income of $3.47 million in the quarter, a stark contrast to the $2.2 million loss in the prior year period. Despite the positive financial figures, HCW Biologics faces a critical challenge: the risk of delisting from Nasdaq due to failing to meet the minimum $1 share price requirement. The company's appeal hearing is set for May 5, 2026, and failure to resolve this could lead to removal from the exchange. The firm has also flagged going concern issues and is actively seeking. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Additional capital and partnership opportunities. Meanwhile, HCW Biologics continues its Phase 1 clinical trial for HCW 9302, which is being studied for alopecia areata. Initial results from 2 dosing cohorts are expected in the first half of 2026. This development could provide further insight into the drug's potential and impact investor sentiment. Despite the revenue boost, HCWB stock declined by 3.55% following the earnings announcement. This suggests that investors may be skeptical about the sustainability of the revenue spike, which was largely driven by a one-time licensing fee. Management has acknowledged the need for ongoing financial support and strategic partnerships to sustain operations and advance clinical programs. The company's financial performance, while improved in the quarter, still reflects underlying operational challenges. Reduced operating expenses helped contribute to profitability, but the reliance on a single transaction for most of the revenue raises questions about future growth. Investors are watching closely whether HCW Biologics can diversify its revenue streams and achieve consistent financial performance. The Nasdaq delisting risk remains a major overhang, and any negative outcome could further pressure the stock. The appeal hearing is a key event to monitor in the coming days. In addition, the progress of the HCW 9302 trial could influence market perception of the company's pipeline and long-term viability. HCW Biologics is at a pivotal point, with the outcome of the Nasdaq appeal and the success of its clinical trials likely to shape its near-term trajectory. The company's ability to secure new partnerships or raise capital could determine whether it can. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Stabilize its financial position and continue its development efforts. If the Nasdaq appeal is unsuccessful, the company may face increased pressure to meet financial thresholds or consider alternative listing options. The clinical trial data, if positive, could help restore investor confidence and support future valuation. However, if the results are mixed or delayed, it could further complicate the company's path forward. With both regulatory and operational hurdles ahead, HCW Biologics will need to demonstrate clear progress to maintain stakeholder support and avoid further instability.